Hello everyone, welcome to Just Invest Today, and today we're going to be talking about a new company called Upstart. So can this be the next big company in the finance, in the fintech space? Because we know fintech is making a huge impact in the market and in the community, and we want to know, is this the next big company? So let's get into it. Upstart is a finance personal lending company. This company uses AI technology to actually find out if people are credit worthy and if they can actually lend to them at like supreme good rates. So when we're looking at Upstart, we have to understand that this is going to be taking over or actually combining with the actual banking industry because we know banks are lending at high rates as well. So can this company come in, go into this market and take over or grab people to actually expand and get bigger? So Upstart already debuted in December and it's already doubled in price since it actually came out in December and made a public offering. So Upstart is trying to change the way we look at lending and finance, and it's doing this by actually solving two problems and it's trying to create more value in the system. And it's doing this by trying to get a far more range of people, going actually lower into the credit score people that probably are able to actually get loans, but the banking system is actually kind of trying to avoid. And it's doing this at a faster rate. So people are actually getting loans faster. And this is what Upstart's value is and what it's trying to create in the world of finance. So is this company able to do this better than the banks? Because remember, it's using AI technology to do this. So we got to find out, is this company valid in this time? Is it going to be expanding and improving its margins? So Upstart mission is to enable effortless credit based on true risk. Why? Because credit really matters. Money is fundamental ingredient of a life. And unless you're one of the few percent of Americans with significant wealth, the price of borrowing, it affects you every day. Throughout history, affordable credit has been the central to unlocking mobility and opportunity in the market. So what Upstart is actually doing is taking account alternate data. We know the traditional banks actually use 5 areas to determine the credit worthiness. They use payment history, current level of indebtedness, types of credit used, length of credit history, and new credit accounts. And they actually add up the score and they find out, are you able to pay off this credit when we give you a loan? And that's what the traditional banks are doing. But what Upstart is doing is using AI technology to use actually more data points to come up with these price targets. It's using 1,600 different data points to come up with these price targets to see if you're eligible for a loan. This allows Upstart to look at consumers with lower credit scores. So by doing this, they target a large untapped population of people with poor credit history, but can possibly still be able to pay for their loans by using non-traditional variables such as education and employment to predict credit worthiness. These can actually go up to $50,000 loans, and they actually do auto loans too. They've been growing revenue at a very fast pace. In 2020, 44% of their revenue growth. Is this sustainable? Can they keep this going? 70% of the loans they close is fully automated, so no labor costs using algorithms the company has developed. Upstart is not a bank itself. They partner with banks, but Upstart gets referral fees. They use algorithms to find credit-worthy borrowers that the system has overworked and partners with banks who make actual loans, get the referral fee for its service, so there's not a lot of credit risk. But can this still be risky because they're actually depending on the banks? So Upstart is actually going after the lower tier borrowers. And by doing this, they're getting into that untapped market. The banks don't want to touch them because they think they're not credit worthy. But Upstart's using these algorithms to guess and assume that these guys can actually pay off their loans in time. So guys, what do you think about this model of actually getting these referral fees, giving these loans actually to the bank? So partnering with the bank actually gives out the loan, but Upstart is finding the customers and they get that service fee for doing this. which is a pretty solid business model because they're not actually taking on a lot of risks in terms of the money. So, what do you guys think about this model? Look at Upstart's model versus traditional banks. You can see how much it's improved. And this is where huge revenue growth can be sustained and continue growing. 75% fewer defaults at the same approval rate than traditional banks, and 173% more approvals at the same loss rate. So you can see why this company can actually continue growing in the future and why it has such a strong competitive advantage in this field against traditional banks. So Upstart's leadership and the co-founder of the company is actually one of the Google employees, one of the presidents of enterprise at Google. And he still owns 60% of the shares in Upstart, which is good news because we like to rely on that. So we like to see that the founders are actually still invested in the company. So if the company does bad, they do bad too. This company is still kind of expensive, on the expensive side, with a huge PE. So we still got to be very careful if we want to invest into this company because it's already 20 times its sales. So people are paying up for the company. They have big things in mind for this company. Even though Upstart has actually strong leadership, a former Google president, we got to look at the risk of the company and see if we want to invest into this company. So the first risk I see is that it actually relies on the banks for its loans. So remember, they get a service fee for what they do and how they help the actual bank find customers. And what if the bank actually uses other people or they start going out looking for different companies? That could hurt Upstart's potential and their profit. The second big risk I see with this company is that they use technology, algorithms. So can another company just copy what they do? Is their algorithms just so much greater than the other companies? Because remember, a lot of fintech companies are starting to use this. They're starting to develop, come into the market. So what if someone just replicates what they're doing and they actually do it better than them? We can see this happening easily in 2-3 years, or even now. There's a lot of companies coming up now that use fintech algorithm AI technology. So those are two big risks you got to see before you invest into the company. But even if you see that risk and you still feel confident in the company, I still think this revenue can still grow. It can become profitable in the future. So what do you guys think about this company? Is this a good company to invest in now? Should we wait for a pullback or should we get in now before it takes off again and goes higher? What do you guys think? If you guys like this video, can you please like and subscribe to my channel, and I'll get back to you in the next video. Peace out.